And here's a story which should make you sit up and listen. Some of the nation's biggest banks are taking out life insurance policies on their employees, both past and present here. When the employees die, the banks get a tax-free benefit, and that money is being used to pay for executive bonuses as well as executive benefits. Now, Congress tried to regulate this behavior back in 2006, but millions of contracts were grandfathered in. So it's, again, a story we're going to be watching. Not necessarily illegal, not just the banks doing it, but it just sort of sounds funny, doesn't it? Joining us this morning to talk a little bit about what's going on in the financial sector overall is Matt McCormick, our Ball & Gainer, Investment Counsel Portfolio Manager. Good to have you, Matt. And WStreet.com founder and Fox Business contributor Charles Payne. So, Charles, why don't we start off here with the life insurance story, just to get that out of the way a little bit, because it doesn't sound right, that a bank could use your life insurance, your policy, and pay the big guys some big money?
Right, but it's using policies of people who work there. I think what some people worry about, what some critics are worried about, is that it's actually a tax-free way of doing this. And, also not just the executives, but people throughout the company. Now, in 2006, Congress addressed this a little bit, and it's only the upper tier. But still, people sort of, it rubs people the wrong way, particularly when they hear the amounts. I mean, bank-owned life insurance is $122 billion. That is an astronomical number, and to think that these banks will be getting this money tax-free down the road, it does bother a lot of people, although it's legal.
Although it's legal. So, Matt, on that, I mean, we're going to show a little bit about what this has looked like over the last year or so, exactly how much some of these banks are using. Bank of America was actually leading the way. We'll bring that up in just a second. But, Matt, it's not illegal. So, I mean, what do you do with a story like this? Is this sort of just something that you pay attention to, makes for some good conversation and move past it? Is it anything for these banks to have to deal with?
Well, I think, Jenna, when you look at bank-owned life insurance, this is something that started in 1986 under the Tax Relief Act. It's been around for a number of years. This is a compensation package that is used not only by banks but by other entities to fund a multitude of uses. I think the broader issue here is trying to limit compensation, or kind of focusing and jawboning entities to lower compensation, restrict it. That's the concern. This is something bank-owned life insurance has been around for years. It's not surprising that it's used. I'm just a little bit surprised at how it's coming out now, that all of a sudden the politicians are concerned about this today. And I think the entity here, the issue is limiting pay packages, which is a slippery slope.
Well, maybe a little bit of a slow news cycle and a holiday week can be responsible for certain stories like this. Matt,